Welcome to this breakdown of the collateralization model that was recently announced in the brand new document from Valhall Capital, talking about lots of different models trying to determine a fair market value for an XRP. If you're excited for the numbers we're about to talk about in this video, click like, hit subscribe if you want to see more from me. But let's first give an overview of what this model is. The collateralization model is based on the idea of all value being tokenized and put onto the XRP ledger. And it calculates the price of an XRP by taking all of the value that is tokenized on the ledger and dividing it by the total supply of XRP tokens. Interestingly, this model is based on accounting principles and considers a variety of asset classes. And those include money supply, private wealth, real estate, central bank assets, derivatives, commodities, energy, and debt. And this model really takes an extreme approach on getting a valuation for an XRP token because it's essentially saying that all of the money in the world must be tokenized and put on the XRP ledger. And it's almost like an insurance policy that covers you for the absolute worst case scenario, just to make sure that there's enough money for the payout should that ever happen. There may be elements of this that I have to look down and read from here because it is actually a calculation, but let's get into the methodology behind this model. The value of all of the money was determined using the following equation. Basically, the whole value of all of the money in the world was determined and then divided by the total supply of XRP. This calculated the total money supply that must be collateralized per coin. This model also assumed that everything would be tokenized by 2030. Then also a net present value with a 10% discount rate was applied to determine the XRP value in today's money. There's obviously a few assumptions that this model makes, and it makes many. It obviously calculates all the money in the world using documented resources. Interestingly though, it also uses numbers that are incredibly difficult to actually determine, and actually for that matter, difficult to verify. And the stance that they've taken on this is actually they've gone on the conservative side. This scenario also assumes that all the value is tokenized at once, which again is highly unlikely just because the technical feat that would require is immense. So as this model is called the collateralization model, let's get into what collateralization is. Collateralization is the process of getting a loan against valued assets. Assets that are considered collateral are typically very liquid. And as mentioned earlier, all the definitions of collateralization all come from an accounting perspective. And from an accounting perspective, tokenized assets and liabilities on the XRP ledger are almost treated like numbers on a big global balance sheet. And the transactions of these tokenized assets on that global balance sheet is simply just writing another line, another transaction on that global balance sheet, essentially allowing from an accounting perspective for a profit and loss type report to be made, almost like an income statement. So let's get into the economic efficiency. If XRP is the most liquid asset and the XRP ledger is the most efficient network, being that it can transmit large amounts of value, it can do it very quickly and at almost no cost, you could create the logic to say that all the value will touch this ledger or this network at some point, and by the report, given enough time. And this is, by definition, the essence of economic efficiency. So let's get into some of the finer details and ultimately that big price prediction that we're looking for. This model uses the G20 central bank balance sheet of 2022 to 2023. And that's the balance sheet of all G20 nations. And the total value on those balance sheets was $201.5 trillion US. As mentioned earlier, the model uses the net present value calculation to determine what the price of the XRP is in today's money based on how the value of money changes over time. So using a present value calculation with an 8% discount over time, the total discounted cash flow from 2022 to 2023 is 6.29 quadrillion US dollars. With a discount rate of 10, the total discounted cash flow from 2023 to 2030 is 6.22 quadrillion US dollars. And with 12%, it's 6.15 quadrillion US dollars. So that gives us actually the ability to calculate the price of an XRP using those three levels, 8%, 10%, and 12%. So here we go. Here's the price prediction. With a discount rate of 8%, the price of an XRP is just shy of $63,000. And that's based on total supply, and it's actually $124,000 per XRP when calculating the circulating supply. With a 10% discount rate, based on total supply, we get just over $62,000 per XRP and $122,000 per XRP based on circulating supply. Then finally, with the 12% discount rate, we get $61,500 for the total supply of XRP and $121,000 per XRP based on circulating supply. This model gives a really interesting perspective on what's possible for the XRP token in terms of value. I'd love to know what you think about this calculation, and having looked through the document yourself, which is linked below, let everyone know in the comments if there's any information that you feel like you could add to add value to this conversation. Additionally, I've also talked about all the other models mentioned in this document. So pick one of these videos to watch next and get into more price predictions, some a little lower and some a lot higher. Stay emotionless, and I'll see you in the next one.